Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Dear viewers, the year FY22 has come to a close, and this was yet another year when the small cap index surpassed the gains in the Sensex. For the record, in FY22, BSE Smallcap index witnessed a gain of 34%, beating Sensex by 2x. In FY21, the small cap index had surged 122% versus 77% gains in the Sensex. Since the COVID crash, the total gains in the small cap index until FY22 stand at 223% versus 128% gains in the Sensex. So, is this time to be cautious with small caps, or will FY23 be yet another year when the small caps will outperform? Well, let us see what the small cap index to Sensex ratio suggests. The small cap to Sensex ratio stands at 0.51 times. This is higher than the long-term average of 0.43 times. What this means is that the easy money in small caps has been made, and it would be prudent to exit or book partial gains in the positions where the valuations have run ahead of fundamentals. At the same time, it is worth mentioning that the ratio is still well below the previous peaks. In the previous peaks, this ratio was 0.58 times in January 2018, 0.55 times in November 2010, and 0.8 times in August 2005. So, there is a scope of decent upside even with respect to current Sensex levels until the small cap index peaks. As someone who believes in India's long-term growth story and possibility of Sensex touching 1 lakh mark this decade, the scope of wealth creation in small cap space is even more promising. As per the median, if Sensex does touch 1 lakh mark, the small cap index could touch 43,000 mark versus around 29,000 mark at present. Investors should also keep in mind that there has been consolidation in the small cap space, with stronger players gaining the edge over less competent peers who have either disappeared or are shrinking. The balance sheets for stocks in the small cap index looks much cleaner now, and the cash flow from operations has never looked this good in last 5 years. And after a long lull, the capex revival is coming back, with banks having cleaner balance sheets and relatively easier access to credit to strong players in the small cap space at benign interest rates. So, while I'm positive about this space, there are a few things that you must ensure to be on the winning side in small caps. You must focus on small cap companies that are not just showing earnings revival but are backed by solid balance sheets as well. You could further enhance your probability of success by betting on market leaders that are backed by promoters with an established track record of execution. Yes, there are some clear market leaders in the small cap space too. These include companies like Multec Packaging in rigid packaging space, Mayu Unicoaters in artificial leather space, Cabra Extrusion Technique in plastic extrusion machinery, Kaveri Seeds as the largest listed player in hybrid seeds and the first in the world to have more than 1 lakh acres in production area. CCL Products as the largest instant coffee exporter and private label manufacturer across the globe. Oriental Carbon is the only in India to manufacture insoluble sulfur and commands a 60% market share in the domestic market. Rajratan Wires has 50% market share in India in a very niche segment of tire bead wire manufacturing, and Sheela Foam has close to 30% market share in organized mattress market. Then there is No Seal, that is the largest rubber chemical manufacturing company with 40% market share in India, and the list goes on. Please don't consider these as buy recommendations. The point I am making is that within small caps, you'll come across many players that are largest in their niche and indispensable to their clients in B2B or B2C segments. And these companies deserve special attention in the small cap space. Coming to some lessons that I have learned and would like to share with you for better returns in the small cap investing. Peter Lynch once said that in this business, if you're good, you're right 6 times out of 10. This is especially true for small caps where volatility and small size can turn out to be very unfavorable for the business during market volatility. What can help one ride such times is prudent asset allocation. Well, there is not a single investor, no matter how legendary, who did not end up with failed investments. It could be a case of bad decision making, industry related negative developments, disruption, or the management taking bad decisions, or something totally unexpected and unrelated to the business. What separates legends from ordinary investors is not the lack of losers or the bet on big gainers, but how less they lose when they lose or how big they gain when the stock outperforms. In the end, it all boils down to asset allocation. A stock crashing by even 80% may not turn out to be too bad for you unless you are overexposed to it. So always keep the probabilities in mind, stay humble, and allocate wisely. It's okay to build on a position over time with more conviction rather than overloading on a stock based on a speculation. Investing is not just about winning big but staying in the game, and a well diversified portfolio ensures survival. If you do the hard work, make the right choices, do the right things, and stay disciplined, you'll find companies that will eventually get over the near term volatility and headwinds and go on to generate lasting gains. While a 100% success ratio in investing, more so in small caps, would be overambitious and unrealistic target, you could improve the probability of winning by having a long term investing mindset so that the compounding can work its magic. But this strategy works if you have invested in the right team, which brings me to the next criteria: the importance of management quality in successful long term investing. Investing is like a business. Managements, in that sense, are your business partners. If you look at investing from this perspective, it is obvious that you want to invest in jockeys who are thinking big, have decent skin in the game, and are intelligent and good at execution. More importantly, you should invest in people with integrity. Otherwise, all the intelligence of the management could work against you as a minority shareholder. Pick any big winner in the stock markets in India or globally: Amazon, Tesla, Facebook, Avenue Supermarts. Why did hundreds of businesses die in dot-com crash while Amazon went on to become a global behemoth? Why did Future Retail and Avenue Supermart ended up so differently despite being in the similar industry? Well, it is obvious that the journey of these stocks would not have been the same without their promoters' vision and execution. It sure needs some work to assess the management quality than buying on the next hot tip you come across on social media. But a little work here can catapult your luck in a big way. Once convinced, you can invest and forget, and all the hard work is done by the management and you can enjoy the fruits. The next important criteria to enjoy a great run in small caps is building the capacity to suffer. Well, this may sound as a contradiction to my positive long term view on the small caps, but here is the thing. There is almost a 100% chance that you will be tested when markets turn volatile. It could be a pandemic out of the blue or the sudden onset of a war. Some event could make your portfolio crash by 20% within days or weeks. If that causes you to panic and exit, you'll never get to see the rebound in quality businesses. This reminds me of the down cycle in small caps that started in January 2018. At the bottom, the small cap index had crashed by over 50%. But as we saw in the first chart, the rebound more than made up for that crash. But only those who had the capacity to suffer could enjoy the cycle. What helps to develop this capacity is hard work and conviction that you develop while picking the stocks. So, while there may not be enough low hanging fruits in the small cap space at present, the potential for big returns from select small caps is huge. If you follow this template, you are likely to turn the odds of success in your favor. Well, that's all for today's video. If you found it useful, please like, comment, and share. And do subscribe to Equitymaster channel for more such content. Thank you for watching. Goodbye.